The biggest question on the market right now is, will Bitcoin have the strength to break through the 118,000 to 121,000 resistance wall and unlock a historic bull cycle? Or is this just a distribution trap before a brutal correction? In today's video, we'll cover four key parts. First, the macro and long-term picture to understand where the on-chain fundamentals stand. Next, the short-term dynamics, from stablecoin flows and ETF activity to whale behavior. Third, the risks and supports, where ETFs and sentiment can act as the real trigger. And finally, we'll put it all together into concrete scenarios for BTC and ETH in this decisive phase. This is not just a simple market update, it's a complete perspective built on raw on-chain data, signals you won't easily find anywhere else. If you really want to understand what's happening behind the price and the flows, watch until the end, because the answer lies in the data. Currently, 91.7% of all Bitcoin supply is in profit, an extreme level only seen at the late stages of 2017 and 2021 cycles. At such extremes, even a small supply demand shock can trigger massive volatility. Data shows that 3 to 7-year-old coins are being distributed, long term holders cashing out at high prices. Meanwhile, short term holders are not panicking. Realized losses are only around $50 million, far too small to be called capitulation. We're in a high level distribution phase, more likely sideways up or shallow correction than a full scale crash. Between August September, LTHS and miners sold heavily, but by late September, this pressure eased. Notably, fish shark cohorts, 10 to 1,000 BTC wallets, have been accumulating aggressively, acting as a buffer absorbing supply. The market is compressing, waiting for a new trigger, most likely stablecoins and ETFs. ETH balances on exchanges dropped from 30 million to under 15 million in 5 years. Much weaker spot sell pressure. But 97% of ETH supply is held by the top 1% of wallets. A double-edged sword. Supply shortage is bullish, but one dump could trigger a mini crash. ETH has bullish supply fundamentals but extreme whale-driven risk. Stablecoin net position turned positive at the end of September. Fresh capital is ready to deploy. Bitcoin ETFs. Mid-September saw approximately $750 million inflows, then approximately $300 million outflows, but turned positive again by September 30th. When stablecoins plus ETFs are positive, LTH and miner selling is usually absorbed well. Key resistance 118 kilohertz to 121 kilohertz URPD/SOPD cluster. Many holders here ready to sell. Key support 108,000 to 112,000. Thick liquidity zone. Fear and greed index equals 40. Market cautious. This is the easy stage to do commercial scope. Dips to support bring in new capital. Breakout needs. ETF push. ETH is around 4.2k to 4.5k, close to previous highs. If BTC breaks 121,000, ETF may rally harder due to supply shortage. But if BTC fails, ETH could drop harder because of 97% concentration. What do you think? If BTC fails at 121,000, will ETH crash harder? Comment below. Risk BTC, LTH plus miners continue selling. Stablecoin net position may turn negative. ETH 97% concentration risk. One whale dump equals mini crash. Support zone BTC 108,000 to 112,000 liquidity zone, plus ETF flows back positive. ETH extremely low exchange balances limit prolonged sell-offs. Bull case 25%. BTC breaks 121,000, ETF strong inflow. ETH pushes above 4.5k. Base case 55% BTC ranges between 108,000 to 121,000. ETH holds 3.8k to 4.3k. Bear case 20% BTC rejected at 118,000 to 121,000, drops to 105,000 to 108,000. ETH could fall under 3.5k if whales dump. Current weight base 55%, bull 25%, bear 20%. As you can see, 118,000 to 121,000 is the firewall that decides the cycle. If BTC breaks through, price discovery begins. If it fails, the market stays trapped in sideways tension. Ethereum, meanwhile, is a ticking time bomb. Supply shortage supports the upside, but with 97% concentration, one whale move could shake everything. Domline. The dominant case is sideways up, 55%, waiting for ETF and stablecoin trigger. But remember, this market is like a chessboard. Whales and institutions hold the pieces. Whoever strikes first sets the tone for the next 30 to 60 days. What do you think? Will BTC break 121,000 this month? Share your thoughts in the comments. Let's discuss. If you found this video useful, don't forget to like, share, and subscribe for the hottest on-chain insights. Disclaimer: this is not financial advice. All analysis here is for educational purposes only. Always take responsibility for your own decisions.